honestly, though, I know for a lot of people, this is a bleak winter. It is tough times financially. It's tough if you're renting because the rent's just gone up. It's tough if you're a mortgage holder because you're doing this juggling act that you're holding your breath, hoping that there will be a rate drop. And maybe there's some hope on the horizon, but honestly, you can only hold your breath so long. Joining us on the program now from Christian Savings, Dan Mazengarb. Dan, how's your breath-holding skills going? How you doing? Welcome to the show anyway.
Kia ora, Andrew. It's lovely to be back after a couple of weeks off.
Yeah.
I am actually quite good at holding my breath
Are you?
because I have a history in freediving.
Oh, my goodness.
And now I'm a Christian banker, so the two things go quite well hand in hand.
They do actually, and all of your life has been preparing you for this moment, holding your breath, hoping that perhaps the Reserve Bank are going to pull some levers and nudge things in the right direction, and we might get some changes to interest rates, although any levers that are pulled now, it's not going to take effect immediately, is it?
Yeah, it's kind of, if we were to combine banking or the economy with theology, it's a bit like our faith. We sit here eagerly awaiting the kingdom of God to come. And whilst we might have hope for that, it doesn't mean that our present pain isn't felt.
Now but not yet, that type of theology.
The now but not yet, exactly.
Okay.
And I think if the Reserve Bank was to pull that OCR lever even sooner than expected, then ironically we have the same problem that they've been dealing with is when they jacked up the OCR, it took a while to take effect because obviously people have fixed mortgages and they roll off over time. Well, we're going to have the same thing when they bump up reduce the OCR, is that it will take time to filter through the system, even if more people are floating now than fixing. It still does have that delay. And I think, whilst we can be confident that we should see those reductions in the second half of this year, the data and the anecdotal confidence in the market is certainly pessimistic about the pain that they're feeling now.
Yeah, certainly. So talk us through the process, the rumours, and more than just rumours, certainly some indications from the Reserve Bank that this is their plan. Good news from the Reserve Bank's point of view, they're actually hitting their targets, right?
Yeah. Well, so they do believe that we'll get back into that 1% to 3% band in the second half of this year. Where I was at an event with Andrew Urquhart a couple of months ago, and he was talking about the stickiness of getting from sort of 4 to 3 or 3 to 2 is actually quite sticky and hard. But when you look at the data coming out, 43% of respondents to the Retailers Association said that they had little hope that they would be trading in 6 months' time. We've got arrears up. We've got 28% increase of credit arrears in the personal loan sector. Motor vehicle sales are down significantly. We've got a lot more insolvencies in the construction industry. So, the Reserve Bank has achieved what it set out to do and slow this machine down.
They've treated the symptoms but killed the patient, perhaps.
And that's the whole, whole soft landing idea. But I had lunch with the CEO of a social enterprise yesterday, Money Sweet Spot, who we're an investor into, and they obviously refinance people from 30-45% loans down to 15-16, and even a lot of their clients, there's redundancies in the public sector, construction, retail are all slow, and even some of their clients are in trouble. So it's not a great time for people out there.
There are changes to lending regulations which are kicking in as well, although some concerns about those. Perhaps taking off some of the restrictions, but particularly for more desperate or vulnerable people in our communities, this may not be good news.
Yeah, look, it will be interesting to see how that goes, and I do hope that maybe the more responsible end of the sector, if I can call it that, will step up for those people.
Yeah.
And certainly the likes of Money Sweet Spot are there for those in trouble. So it will be interesting to see how that goes. Yeah, I don't have a view on that at this stage.
Yeah. Yeah.
Some challenges ahead.
There's certainly some challenges ahead. So, expectations then on how this goes. So there's an expectation of a change in the OCR, which will send a signal to the banks, which may, well, one goes first and then the others scramble to catch up. That's generally the way it works. Talk to us about the dance, how this is likely to play out, Dan.
Yeah, look, it's a funny economic phenomenon where everyone's waiting for someone to go first,
Yeah.
and no one wants to be first because it's not good for everyone, right? So obviously the OCR is going to drop. Bear in mind that banks also have other costs of their business that are independent of the OCR.
Yeah.
So some of their costs may have already dropped. But what we're going to see is pressure on the banks to start dropping their rates, and they will typically be slower to do that. They'll be quicker to drop their term deposits rates in term deposits. That's their cost of funds. And so, I mean, the other day, ANZ did reduce their floating rate, albeit they were probably at the higher end of the market anyway.
Mm-hmm.
So you will start seeing a little bit of a dance of one bank will cut, the others will follow, and then another bank who might be a bit more hungry for refinances will cut again and advertise a sharp rate, and so everyone will slowly trickle down. So it's certainly not an instant reaction when the Reserve Bank does make that call.
And certainly for people listening to this who I don't know, locked in for another 18 months or 2 years in the last few months. The good news is quite a long way away, as you were saying beforehand. It takes a while, when that loan agreement is up for renewal. If that comes up for renewal, or if you're on a floating rate, then the good news will come a little bit faster, perhaps.
That's right, and it's a bit of a funny game. Do you float now? Do you fix? We are on our book. We are seeing more of our borrowers float, knowing that things should change. So, look, it is a funny game to play at the moment. But I think the underlying news is, hey, we should have some interest rate relief. So hang in there, because we will be able to see, reap the rewards soon.
Yeah, no, perhaps an early Christmas present, although it may take until the end of the year for us to be able to unwrap that present. But in the meantime, difficult for mortgage holders, difficult for businesses, a difficult time in the economy generally. Dan, thank you for the good work that you do at Christian Savings, building the kingdom of God, literally through support of a Christian community who make deposits with you. If people wanted to find out more about your ministry and the work that you do, what's the best way of doing that?
Go to our website, christiansavings.co.nz, and if you're an elder, trustee, director, or someone in a governance position, we have our governance conference coming up later this month, really wanting to equip the boards of churches and charities to govern well. So check that out on our website too.
Okay, check that out at christiansavings.org.nz. Dan, thank you again. Thanks for joining us.
Kia ora.
Hey, thanks very much for joining us in the Rhema studio. Thanks very much for watching the interview. It's kind of nice to have an audience, actually. And if you did like what you watched, then do give us a like, do give us the thumbs up. And if you'd like to see more interviews like that one, or perhaps even better, subscribe and those interviews will come straight to you. Don't forget to turn on your notifications, and we'll see you in the next one. Cheers.